All right, let's go back to the markets. The fixed income and currency markets this time. The Naira strengthened since the reintroduction of the retail Dutch auction system for dollar sales and other policies by the central bank to show up the value of the Naira. And this followed initial panic selling by banks to exit positions given the reduced outlets for dollars. And Ramat Baba, a currency trader at UBA, joins me now to review the Nigeria's fixed income and currency markets. Ramat, thank you very much for joining us. So I guess a good place to start is the strengthening that we have seen in the Naira since the reintroduction of the retail Dutch auction system. What I gather is that a lot less sales are happening compared to what we had with the wholesale Dutch auction. Can you just talk us through activities in the current FX market since that retail Dutch auction system was reintroduced?
Okay, after this, good evening, Wande, sorry. After the CBN released the revised circular guiding the FX markets, banks realized that there were fewer exits for them on the dollar side, so they had to exit some positions, as the CBN had capped the maximum amount of dollars that could be sold to each BDC per bank per week to $250,000. That's from the previous $3.5 million. As a result, a lot of banks had to exit positions because they realized that they had fewer exits. Right. Then another thing that actually strengthened the Naira in the last week is the sale by NNPC of over $450 million. This has further reduced the demand in the FX market. Before the CBN actually released the circular, the market was trading at 161 levels, but today the market traded at 160, 20, 30 levels. In fact, we actually saw the market touch 159 levels in the last few days.
All right, so the Naira in a much better place now, but can it stay there in your view? What's the outlook?
In our opinion, we actually expect to see further strengthening of the Naira at the retail Dutch auction window. That's last week, 188 million was sold at a stop rate of 155.75, and this month the $231 million was sold at the stop rate of 155.73. That's a 2-kobo appreciation for the Naira. We actually expect to see further strengthening of the Naira at the retail, at the Ardas window. However, in the interbank market and on the street, that's the parallel market, we expect the dollar to shed some of the gains it has received due to the scarcity of dollars on the streets, as well as the demand creeping back into the FX market. Right.
So in the interbank market, do you think 162 is perhaps a more normal level for the Naira? It's now, like you mentioned, closer to 160.
160 levels. We really do, in our opinion, we don't think it's going to get to the 162 levels because the CBN will surely intervene to keep the Naira coming low.
All right, so of course we're following that and see how it plays out. But foreign investor participation in this market right now, it's clearly been key in the past. A lot of foreign investors coming in to buy Nigerian fixed income instruments, and of course that has been supporting the Naira. Do you think that dynamic is likely to change over the next 3 months?
No, we don't see anything changing in that aspect because the Naira is going to probably keep strengthening in the official window, so that should be a bit of boost for the currency.
And of course, if the Naira strengthens, then the foreign investors stay interested in Nigeria's fixed income instruments. Of course, the central bank has shown clearly that they want to defend the Naira, and so far so good. They seem to be succeeding in that attempt. Okay, let's move on to the interbank market and the liquidity flow in that region. Can you just talk us through the latest there? We've seen, of course, as usual, we see spikes in terms of liquidity. Recently, we've seen liquidity come back, and I'm hearing that with some maturities coming up later on this week, that we might see rates even fall back a little more.
Yes, in the month of October, that's actually in the last 9-10 days, the market has been very liquid, and this is actually due to the receipt of the Federal Allocation Fund. This came in at the end of September. 323 billion was received into the system, and this has made the rate, the overnight NIBOR rate has been trading on an average of 12% daily. The major event in that local currency money market really has been the NNPC withdrawals from the system in the last 1 week, and we actually estimate the figure to be about 150 billion Naira. Right. Aside that, the other events have been the debit for the OMO sales by the CBN, as well as the FX sales, that's for ARDAs. Rates on the average, like I said, have been trading at levels of 12% daily, except for today when the market actually got to levels of 15%, and this was actually due to the funding for the ARDAs, as well as more NNPC debits today. Also, counterparties were expecting CRL to be posted, and most of them didn't have their positions ready, so they just had to cover positions in the interbank market. Also, today being Wednesday, people had to rely on, most counterparties had to rely on covering their positions interbank, as the option of CBN was not really available to them because they were funding harders. They couldn't access the CBN lending window.
All right, you mentioned debits for OMO and for FX, but what about the CRR? Because now we've seen those FAC allocations disbursed and the impact of that on liquidity. One imagines that in line with the central bank's regulations, we'll see some debits for the FAC allocation as well. Is that correct?
We really don't expect CRR to be a major debit, if at all. We project a credit or at worst a debit, though very minimal, into the system. So that shouldn't really push the market much.
Right, but why should we see a credit? Because I imagine that we should see a debit, or am I reading dynamics wrong with respect to how FAC is treated?
Really, CRR is basically calculated based on LCY deposits per bank. We look at what the system was, as the system liquidity increased since the last CRR debit, or has it reduced? In our opinion, we think there's been a bit of reduction, so we actually expect to see a bit of credit coming back into the system as the cash reserve.
All right, so what's the outlook for you in terms of interbank rates going forward?
For Naira, for tomorrow, there's about 170 billion Naira OMO bills maturing. So we expect to see a dip in rates tomorrow. We actually forecast that rates will trade at levels of probably 12.5%, 13% tomorrow. However, as the liquidity starts drying out again from the system, we expect rates to start inching up again. And unless there's any other major inflows into the system, we expect rates to continue their northwards movements.
All right. I don't know how much you trade in terms of T-bills or bonds, but how do you see the dynamics in those markets playing out going forward, given the volatility we're seeing in interbank rates right now?
Really, since there is liquidity in the system, we think counterparties will actually be investing in treasury bills. We expect them to be buying bills, unless if rates are going to probably go high as today's levels of 15%. They might just decide to place their money into bank, since the yields will be more attractive there. Right.
And what are your expectations for those OMO bills issuances? We've seen them increase recently. Do you think this is going to be the case for most of this quarter? And one would have thought that when the central bank and of course the MPC introduced this CRR debit for public sector funds, the OMO bills issuance should reduce, but then we're seeing them come back again.
Really, I'll say the OMO bills issuance has actually reduced, but because of the maturities we have tomorrow, we expect the CBN, we are speculating actually that the CBN will float more OMO bills tomorrow, since about 170 billion will be maturing. However, we shouldn't forget that the rates in recent times haven't been going to levels of 13%. The rates have been about 12% levels.